Hi everyone, today we're going to be talking about Cineworld and Cineworld stock. It's the stock that you guys kind of requested for me to do next. It was the one that won clearly. There was quite a few likes on it, quite a lot of thumbs up on it, so it was a very clear winner this time. So I'll cover Cineworld for you guys. And as always, if you comment down below on this video about the stock that you want me to cover next, and then like the stock that you want me to cover next with the comment, and then click the thumbs up on that comment. And the one that gets the most thumbs up, I will cover. Make sure that you're not posting the same stock twice though, because obviously if I'm going for the one with the most thumbs up and you post it quite a few times, then obviously that's not going to help it win. So make sure that the one that you want me to cover hasn't already been done. But anyways, we'll get stuck into Cineworld. And as always guys, if you give the video a thumbs up, that'll absolutely help it in the YouTube algorithm and get it out there on kind of the YouTube search engine. So for you guys that don't know, Cineworld is a cinema or a cinema chain that owns quite a few different kind of brands. It is on the stock market and it's under the symbol ticker Cine, and it is currently on a massive discount. It's on a massive discount. I was actually really surprised like how much discount this stock is actually on right now. It's actually declined 90%, which is a huge amount. And we'll get on to the reasons why it is down 90%. And basically, because of this 90% discount, it's back down at 2009 prices. Now that's quite shocking when you think about this 2009 prices, the amount of acquisitions that we'll talk about in a little bit that Cineworld has made, the growth they've made, the investments that they've made in improving the cinemas. So back at 2009 prices is kind of saying, look, we're now 11 years different cheaper prices than what we were. This is a great buying opportunity. So that's what we're going to be looking into as well, is is it back at 2009 prices now, and with it being there, is it a good time to go buy? Now I'm going to say right now, my personal experience from these cinemas are, I really do like them. I didn't actually have a Cineworld cinema around me for a very long time, but eventually one got built near me about a half an hour drive away, maybe 20 minutes. It wasn't too far away, but before that it was like a 40-minute drive for me to get to a Cineworld cinema. But yeah, I got one a little bit closer, and I thought I would go check it out as well and watch film there. And overall I was like really impressed with it. It's probably one of the best cinemas I've been to. I gotta say, I do prefer Odeon cinemas over Cineworld cinemas, but Cineworld did come quite kind of close. What I really like about Cineworld is kind of like when you're walking through the door and they kind of all have all them lights everywhere, and the floor in it kind of like reminds me of Stranger Things. I don't know if any of you guys have seen that TV show, but it kind of reminds me of Stranger Things when you walk into like the entrance of Cineworld. And they are really nice cinemas to go to. They are kind of like high-end cinemas. So I really do think they're really good company. As a customer, I think they're really good. So we're going to cover today some of the inside of the company before the fundamentals. So we're going to go through some of the stuff that's been going on inside the company. So it has made some acquisitions, and in 2018 it made an acquisition of Regal Cinemas, and that has really helped the revenue and EPS jump, and also having a lot more locations. Some of them are in the UK. And then in 2020 is expected to complete the acquisition of Cineplex. So it is a company that does like making quite a few acquisitions now and then. Historically it's done it before, it's even done some mergers before, but it will go out and buy a lot of these companies, and because of this it has put a little bit of debt on that balance sheet, which we will cover in a little bit. But as well as that, because of the acquisitions, it does mean this company now is a worldwide company. I do believe it is the second largest cinema chain that is out there right now. So there is in a lot of locations, which is good, which will be really important as well when we talk about locations in a little bit as well. Now when I looked into the earnings report, it said it has made a lot of refurbishments as well as the investments in buying other companies, but it has improved a lot of the cinemas to try and get that better experience for the customer. So it's done a lot of refurbishments, and it's kind of upgraded a lot of big cinemas. It's also actually shut down a few cinemas that aren't doing quite well, which is a good thing for management to show that they're not scared of shutting down sites that aren't doing really well, which is a good thing for the company's kind of point of view. Now when we look into the actual company fundamentals, Simple Wall Street does say it is undervalued at these sort of prices. It's going to offer some steady growth going forward, And the big thing is the balance sheet, and we're going to talk about this as well. Like, the balance sheet has cash of 140 million, but this is the little scary thing on this company. It does have debt of over 3 billion, which is quite a lot of cash to debt. It is a pretty ugly looking balance sheet, and that's kind of like one of the red flags why this company has gone down so much. It's because of this balance sheet right now. Dividend wise though, if it goes back to paying a dividend, it will pay a dividend of somewhere between 3 or 4%. If it can do, we'll see with that balance sheet, it might have to hold off that dividend. And obviously it's one of those stocks that are probably going to cancel their dividend so quick because of them not being able to afford it when it does have a balance sheet like that. When I look at the insiders, you'd think on a 90% discount that it would have a lot of people wanting to buy at these stock prices, but there's not really anyone buying inside the company. There's only been like the lead director that has bought some shares, but they're not flying in to buy it, which is slightly a little bit worrying overall. So overall, my kind of opinions with Cineworld is this. Now, when we look at the balance sheet, there is a lot of debt on that balance sheet, which is worrying. Now, obviously, with the cinema space right now, there's a lot of movies being delayed, and a lot of them aren't open as well, especially in the UK. The US looks like it's starting to open slightly, so maybe some of the US locations will do okay, but definitely in the UK right now, we're not opening up anytime soon, so that's kind of worrying that the revenue is not going to come in just yet. As well as that, a lot of major releases have been starting to get delayed, and obviously when you're a cinema, you don't want your major releases getting delayed because obviously you're not going to have people coming through your door. A lot of them will be kind of scheduled or rescheduled to the back end of the year, just like how James Bond has just been done. That's probably one of the big movies I would say for this year going forward. And as well as that, I do have kind of like an investment already in this area. I currently hold Disney, which is obviously releasing movies, and obviously the cinemas are kind of making the money off them movies. So there's kind of like a little bit of conflict of interest, but nothing huge. There's also that I did consider as well. But overall, when I look at this company, it does have a few negatives, and it is reflected in that share price. I have to say though, it is a really cheap stock, and when I look into it, it's a company that's doing, I think it's doing quite well. If we were to ignore the balance sheet, this company is actually, I would say, a tempting company to go buy. It's just the balance sheet that worries me slightly, because that balance sheet is really, really ugly. And I think that's what putting a few people off investing right now. And also, is there going to be more debt on that balance sheet as well because of them not operating? Maybe have to take a few loans out to pay for a few things. So there's that kind of side of it with the balance sheet as well. So I have to say, I do like this company. Like, if I could ignore the balance sheet and just focus, if the balance sheet was a clean balance sheet, I'd probably actually buy this company. But with the balance sheet there and the company there, it does put you off it, and it is really attractive to get into this stock with that big massive discount that's there. For me though, I can't get into this company because of the balance sheet. There's only one reason why I can't get into it, and that's the balance sheet. And what we've learned over the last 2 months is just how important a balance sheet is to a lot of companies, and especially like the health of the company and, you know, things that can happen. Imagine if an event happened like this 2 years down the line. I mean, Cineworld would be absolutely cream crackered. They would be really stuffed. So I mean, it's really hard to not invest in a company for one bad reason. But when the one bad reason is really standing out, I just can't take the plunge into this one, because I'd be kind of worrying about this company and what's going on and debt and things that are going to affect it. I think as well is that with them not being operating and major releases being delayed for so long, I think you could actually afford to maybe wait on this one, because I don't see it shooting up that much soon. But at the same time, you know, I'm like, it is at a really attractive discount for what you get at this sort of price, this company, because it's not a bad company, massive discount as well. But like I say, it's just the balance sheet. The balance sheet is just a bit too much for me. For me, I have to have a better balance sheet than that when investing into a company. And I have to say that I won't be buying this stock just because of the balance sheet, which is kind of annoying. So, I mean, maybe we'll see what happens in a few months' time. We'll see if the balance sheet gets cleaned up. I don't think it will do. But yeah, I would like to buy this company, but I just can't because of the balance sheet. And it's one of my principles for investing, is having a company with a really good balance sheet. So I'm going to have to give Cineworld a dodge on this one. Even though I liked a lot of things that were going on with Cineworld, I just can't do it because of the balance sheet. So I'm a little bit disappointed because, like I say, I do think it's a good company apart from that. especially with like all the investments it's been making with its new locations, but I'm going to have to turn this one down at the moment. So that's the video for today, guys. Looking into Cineworld stock. I hope you enjoyed the video. As always, if you can give it a like, subscribe if you haven't. I'll see you in the next video.